All right, traders, good afternoon. This is Christian from Hertz Tribeca Trade Group, and this is a review of P&L for the month of August video. And a couple different points that I want to make here, but let's talk about first of all the raw numbers. And this is a video that I've been putting out monthly for months, right? I think almost every month of the year. If not, I'm trying to remember the beginning of the year, but I think I've been doing this pretty much every month of the year, and I'll continue to do so. And so let's get to the raw numbers here. Obviously, I'm very pleased with the way that the month of August went. If we look at the month of August and the performance in the major indices, SPY was up 7%, and for the Qs, sorry, this should say August. There's always a typo in here someplace. The Qs were up 9%, and that's a pretty amazing August, and I believe it was the best August since like 1986. Or I don't know if it wasn't 86, it was some year a long time ago. So these are pretty extraordinary markets that we're in, and today's the 1st of September, and we saw another extraordinary day today, as well. So I don't know if this year is going to continue like this, but I'll kind of go over some things that worked for me and how I'm going to approach this month too. Just a couple things, but if you had performance like this, congratulations, and if you followed a lot of trades in the room, then excellent, congratulations. If you didn't, I'm going to try to talk about some things, some best practices, and some things. If you are a newer trader and you just you didn't have this type of performance, I could try to kind of give you a little bit of guidance for why things could help a little bit, or how things could help a little bit. First things first, I forgot the risk disclaimer. Everything that we're going through is for information purposes only, not giving out any advice or recommendations, anything like that. Where's my so let's just move to this. As you can see, I use this Word document for just about everything. But so the main thing is, as we move, and now that we're in September, forget about what you did. Right? I mean, this year, again, has been one of the craziest years, probably the craziest year I've ever seen, where I've actively been trading, right? I've been, doing this for a long time. I started my career basically back in 1998, so I'm showing my age here a little bit, but I wasn't trading for myself, proprietary trading, back in 98. Now, I witnessed the 99 stuff and 2000 stuff, and that was crazy, and that was very young in my career, and that was all new to me, coming out and seeing what was going on. But this, as far as being, a proprietary trader, this is the most amazing, craziest year I've ever seen. Extraordinary, whatever adjective you want to use. Now, that being said, so forget about what has transpired so far. Try to, and I try to do this as much as possible to kind of cover this up. And basically say, hey, I have to win September. September, I want that to be a profitable month. I've only had one month this year that was negative, and that was February, right? Because as you know, I'm mostly playing this market, which is in an uptrend, to the long side. If we get fierce price action to the downside, I'm going to get caught in some names, but even though I think March was a negative month for the S&P, I still managed to have a really positive month for March because I was just trading within my system, right? So let's forget about all that. I like to use the methodology of, and as you know, I like to always put in a sports analogy. The sports analogy always comes from, for this particular exercise, always comes from Mr. Bill Belichick, who's the coach of the Patriots, used to be the defensive coordinator, won a couple Super Bowls with the Giants as defensive coordinator. So I've always been a big fan of Bill Belichick, regardless of what team he's on. But one of the things that he says, and I always say this in these videos, but when he's asked questions, whether it's like halfway through the season or 3/4 of the season, reporters will ask him, "Hey, do you think what's your odds? Do you think that you're going to make it to the playoffs, win another Super Bowl? What do you think, Bill Belichick?" And he always says, "We're concentrating on the opponent in front of us, and we want to win this particular week against, whether it be the Jets or the Dolphins or whoever they're playing. It's the same thing I try to think about is win the particular month, the week, in front of you. And if you string together a nice, few profitable months, you're going to have a nice profitable year. And that's really the whole goal, in terms of if you're trading for a living or even if you're trading part time, is we do want to make money and we want to be profitable traders. So that's kind of what I would say is forget about what happened. Don't play catch up. Like if you think you didn't have good enough performance, or if you have had really good performance, don't get overconfident, right? So both sides, you still need to kind of stay grounded and not make bad decisions, regardless if you're playing, if you think you're trying to play catch up, or if you're overconfident, you still don't want to make decisions based on what has already transpired. You want to look at the road ahead. Okay, so let me just go over a quick some observations from last month. And this has basically happened to me every month. I wish I had one name that kind of dominated my performance. Some people are really good like that. They'll catch, it'll be a Tesla or it'll be, Apple for the last couple months where they made the chief amount of their money. It doesn't really matter how you get there. If you're really good at a couple names, that's great. If you're trading a lot of names too, like I am, that's fine too. It's just basically, as long as you're getting to where you need to get to. Is that something that I could probably improve on? Making sure that I'm extracting a lot of money out of these big movers. Yeah, that's going to go on my list of something to improve on, right? Tesla was a really good example. I'm going to get to that in a minute. I made some good money in Tesla this month. However, I could have made a ton of money in Tesla this month. So we'll get to that. I got a best practice in here for that one. But Abbott was a nice winner for me. I basically held a trade for about 3 weeks and nothing happened to it. And then I got a nice announcement. But you could see, and even there's other names on my list too for the month that I made some money in too. But these were probably the top names: Abbott, Tesla, Amazon, Alibaba was a real nice trade. Visa worked out pretty well. Starbucks even was a nice little trade. JD.com, Microsoft was also one of the bigger names that should be up front. And then what's really important here is, and again, the market helped. My trading system is I'm a trend follower. So I'm sticking with the trends and I'm going to follow these trends for as long as they last. So when you have a big up month like this, I should be capitalizing on it, right? And that's my trading system, right? Is to basically stick to the trends and make more money when the market goes up, right? So there wasn't a lot of losers for me or big losers, and that's really good too, because I think I'm seeing some newer traders have a tendency to basically blow themselves up for no reason because they're either putting on too much size on a trade, and they're trading just too short term. Now, I had a couple short term trades that did not work out for me, and these were basically, I didn't have any major losers last month, and I hope to, that carries forward. But I talk about options when you're trading options. Only put on the size of trade that you are willing to lose if you're trading short-term options. That's the best way I can describe it. I think a lot of traders will basically have dollar signs, on their eyes, on their eyeballs, and they're sizing up short-term trades just too big. And you have to, like, what has helped me over the years to get to the place where I'm comfortable trading some short-term option exposure is to only put on when I'm willing to lose. All right, and that happened. Like I completely had a goose egg in some Lamb Research short-term calls, as well as ISRG. That trade expired, but again, we're talking about really small hits to my P&L. Not a big deal whatsoever. Right, and by the way, you're going to have some losers too, right? It's going even with the market performing as it is, it's tough to pick every single one. There's a lot of groups that didn't actually perform too well last month, so it's okay to have losers, right? I mean that happens. It happens to everybody. We just don't want big losers. Some small mistakes, I would say. There, this one I'm kind of giving myself a pat on the back here because I just didn't have a lot of a lot of mistakes this month, right? Maybe just letting some winners run a little bit. I talked about that with Tesla. Definitely with that one, right? That one I was really kicking myself because I had the right trade on. I kept on rolling call spreads, and for some reason I just stopped with the trade, and I should have kept on doing that maybe two or three more times. I could have done that with Tesla, with having some weekly call spreads on, making some real nice money in them, and then for some reason I just took the money off the table, right? And I didn't keep any chips on the table for that one, right? And then also a couple names like Apple. I mean, I really didn't trade in too much Apple. I missed the whole boat on Apple, right? So these are things that again, there's always improvements, right? I've got a section down here on continuing to improve. Right? These are things. There's going to be trades. We can't. First of all, we can't catch every one of them, but sure as hell, Apple would have been nice. So there's always improvements to be made. And that was something I would say hindsight with Apple is we did see an awful lot of option flow, and I'm surprised that I did not put on something for Apple. I maybe I played it once or twice or something, but really I was not on my list of P&L that was high. Right, so stocks versus options. I've talked about this a lot because I think newer traders really are sometimes will basically shoot themselves in the foot. For me, I trade both. Right, it's a decision based on number one, like if it's a really volatile name, right? You could just trade stock, right? You should be looking at some type of volatility component, right? So, for example, if you're trading Fastly, FSLY, versus Starbucks, right? Those two names, you have to change your position size based on the volatility. Meaning, you can't put a $10,000 trade in each one and expect the same results, right? They are two vastly different names in terms of their implied volatility, right? So you want to be thinking about putting some type of volatility component, right? Like ATR is one, which is average true range. Look at how much the stocks move in a given day, and you can Google that, and there's some easy equations to kind of look at. I do a little bit of like back of the envelope type estimate where I know that you don't need, if your normal trade size is, and I'm just throwing this out there, like $10,000 in a particular stock, just trading stock, you don't need the same exposure for Fastly as you do Starbucks, right? So if you put $10,000 to work in Starbucks, maybe you only need $3,000 or $4,000 in Fastly because the Fastly moves a lot faster. See that? Fastly faster. But so you should be, you should have a volatility component that you're making sure that you measure, right? And you can look at implied volatility in terms of option on the option contract. That should tell you how fast the name is moving. So yeah, I make some decisions. You'll notice that some names I'll trade stocks, some names I'll trade options. If a name is trading under $25 for the most part, I will try to trade stock because you're taking so much out of the equation. You don't have to worry about expiration, right? When you trade stock, there's no expiration, right? You don't have theta decay. You don't have the market maker manipulating the implied volatility, right? So whenever I can, I will look to trade stock over options. It just suits my style a little bit better. Now, I am using options tactically, but to go back to, like, if it's something like, what did I just trade? I took off Starbucks today, right? That's not a high implied volatility name. That's a name like I would rather trade in options, right? Because you have a little bit more wiggle room with that. They're not going to move as fast, right? So, so that's how I kind of decide which way I'm going to go, whether I trade something options or I trade something stock. A lower volatility name, right? IV name, I'm going to probably trade options. If it's super high volatility, you could just trade stock. You can make plenty of money in stock. All right. And then, of course, I use call spreads quite a lot right now. For high price names, especially like really expensive options like Tesla, Shopify, which have made some money on that today. But the options are just too expensive. It's too much of a risk for me to just go outright calls. Some people can do it very well. I can't. because the reason why I shake myself out of the trade. If I put a contract on for $10 or $15 that expires this week or next week, I'm not going to be able to keep it on for big profits, because if it goes from 15 to 17, I'm going to say, oh geez, this thing can go right back to like $14 in a blink. So I would just rather have it on in a call spread and be able to manage it a little bit differently. Again, everybody's different. Everybody has different risk, comfort levels, so on and so forth. But call spreads work very well for me for high volatile names, and for names that want to run into earnings trades. That helped a lot in August too. We did a bunch of those trades too. Best practices, right? And something to kind of keep in mind, especially now, right? We know that the market is up at the highs right now. We know that the RSI is like an 80 for the S&P as well as the Qs, right? We're in very overbought levels. So be careful of your short-term option risk. That goes without saying in any situation, right? You should always be looking at how many short-term options you have. I define short-term options as anything less than 60 days. Or anything less than 45 days, if you don't want to go, if you think I'm being too strict on that term. But anything less than 45 days, those become extremely volatile, right? Especially we haven't seen any volatility in over a month. If the market goes down 2% and you're in short-term options calls, those calls are gone. You're going to lose that money. For the most part, unless something miraculously happens and it comes back. But that's what you have to be thinking in running a scenario analysis, to make sure that you're aware of that risk. I see traders doing this all the time. They shoot themselves in the foot, right, by taking a big, let's say September call option position, right? What happens if the name gets downgraded? What happens if there's bad news in the name, right? Then you just lost your whole trade, right? So sizing them, position size. Now, I'm not saying, again, like don't trade September options. Just be mindful of the size that you're putting on. And do you really need to have September? Can you go out to October? Can you go out to November? Why would I do that? Why do I give my options more size? Well, because more time, I should say. Because number one, I don't like the theta decay. Right, the theta decay is the highest on the options then. And number two, you're giving yourself more flexibility, right? Leg into some of your positions. You don't. One of the things that I've learned from my past too is not to go all in. As soon as like I see a nice setup on the tape. If you do that, you back yourself into a corner. If the trade doesn't start to work right from the start, now you have to take possibly a bigger size trade that you wanted to, because you know that the option there is that theta decay, right? So leave yourself some flexibility. And even if you like, sometimes I just don't get to a full size option position. I don't really want to be in that position where I've backed myself into the corner and I need this name to recover, right? That's a horrible position to be in, right? It's like you're gambling and you keep doubling down. I don't want to be in that position. So I'm okay with legging into positions and being a little bit more conservative on the option side, right? I don't want to blow up my account or have a big loss. Remember, losers, important. Keep them small. The bigger position you have on, the more trouble you're going to get to. And again, watching your risk first, right? All great traders, risk managers, they watch what their risk is, not what with the dollar signs in their eyes. I've had too many traders come into the room in the last couple months. First question, how much can I make? Can you find me a stock where I'm going to definitely make money in? Wrong. That's the exact opposite. You know what that will lead you to? It will lead you to losses. And I'm speaking from personal experience, right? Now you may luck out for a couple weeks, and we have, right? We've had this beautiful market that we've been dealing with, but eventually it's going to come back to bite you in the butt. It's just, if you're not worried about your risk, when this market corrects, it's gonna hurt a lot of people if they're not checking what their risk is, how many positions they have on, and their position size. Using options tactically, also with option flow. In the room, I talk a lot about option flow, how I'm using it. Right, I'm using it for short-term momentum. What do I also assume? I'm assuming that they don't know anything. Right, where you also get into trouble is where you think that, oh, I got into this trade and I'm going to stick with it no matter what because they must have known something because they bought calls. That thinking in my prior, when I first started trading options, led to my biggest losses. Right? They don't always know. Let me break something to you. They don't always know something, but following option flow, there's a positive to it. It could really create some short-term momentum to it, right? But that's the only way that I use it, as well as for trade ideas. That's it. All right, and here's just some things, of course, to kind of think about for the next month. But that's it. That's the P&L review, and really, what I don't want to do is try to make a lot of predictions, right? Sticking with the trend and sticking with what I'm seeing in front of me in terms of trade opportunities have helped me a lot. Do I want to make sure that I don't get over the tips of my skis when we see sentiment super hot, which it is now? I think you have to kind of be careful a little bit, right, with the RSIs around 80 in the indices. Are we going to get a pullback in September? I would think so. Am I going to try to predict when it is? No. But I'm going to just be able to, I'm going to say, hey, manage your positions wisely. Again, like, be careful with how much risk you have on, especially with short-term options. And that's basically it. If we do get like a 2 or 3% pullback one day, that morning, when that particular day happens, I'm going to have a little bit of losses. It's just part of the game, right? I don't know when that's going to happen. But if, obviously I had a huge day today too. So you can't be super, super defensive like that. All right, guys, that's it for today's video. Have a great day, and I'll see you guys for the webinar shortly.